This is a weekly breaking Forex news update from Horse Forex. For more information, visit our website at www.horsegroup.net. UK Q2 GDP falls by a record 20.4%, but signs of a recovery appear. GBPUSD unchanged. The latest UK GDP data showed that the economy entered into a technical recession as activity slumped across the board. The preliminary Q2 QQ reading fell by a record 20.4%, the largest fall since quarterly records began in 1955. Today's ONS data shows that the UK economy is now 22.1% smaller than it was at the end of 2019, highlighting the effect of the COVID-19 pandemic has had on economic activity. There was a small ray of light in today's release, with the June monthly reading showing growth of 8.7%, beating estimates of 8.0% as the UK began to unwind lockdown measures. GBPUSD remains little changed post-GDP release and trades just under 1.3050, a level the pair opened up at this week. Short-term support remains around the 1.3 thousand big figure, with 1.2978 a secondary level consisting of the 20 DMA and the August low print. Euro price outlook. EUR/USD bull flag in play as COVID-19 case numbers taper. The U.S. dollar clawed back lost ground against its major counterparts during the Asia-Pacific trade, exacerbating the New Zealand dollar's declines after the RBNZ expanded its large-scale asset purchase LSAP program. Gold and silver continued their respective sides as bond yields continued to trek higher. The haven-associated Japanese yen held relatively steady, whilst the risk-sensitive Australian dollar fell back towards the 0.71 level. Looking ahead, UK GDP data may prove market moving ahead of the US CPI release for July. Germany's ZEW Economic Sentiment Index jumped to its highest level in over 16 years this month, suggesting that the European powerhouse may recover from coronavirus-imposed restrictions faster than originally expected. Nasdaq drops as tech rotates out of favor. Nikkei 225 tests resistance. The Nasdaq index fell 1.69% on Tuesday. Sectoral rotation was observed in the U.S. stock markets these days, in which investors took profits from the technology rally and switched into value and cyclical sensitive ones. A seemingly overstretched valuation in the tech sector eclipsed vaccine hopes and improving economic data, which points to a potential rotation towards value and cyclical stocks. Uncertainties surrounding the U.S. fiscal stimulus package are also weighing on risk appetite across the border markets. The Treasury yield curve has steepened lately, suggesting rising inflation prospects and perhaps a more hawkish biased central bank outlook. Among the S&P 500 sectors, financials plus 1.29% and industrials plus 0.53% were leading, while utilities minus 2.13%, real estate minus 1.87%, and information technology minus 1.78% were lagging. Dow Jones, Nasdaq 100, S&P 500 forecast. Stocks slip as Biden announces VP. The Dow Jones, Nasdaq 100, and S&P 500 fell sharply into the close to round out an unusual day of price action. Slipping gold and silver prices, a U.S. dollar whipsaw, and rising yields were some of the other notable developments. all of which took place earlier in the session. The catalyst behind these moves was widely argued, but an announcement from Democratic presidential nominee Joe Biden may take center stage heading into the latter half of the week. In a tweet shortly after the market closed, Mr. Biden announced California Senator Kamala Harris as his vice president pick, despite their clashes in prior debates.